There is some resilience, you have to admit, in the markets. It refuses to go down even if it doesn't go up. And I think that's the best characteristic of the Nifty today. It's up 145 odd points right now. Let me keep the phone in my pocket. It's up 145 points right now. But the chart, the intraday chart will come up on your screen, and that will show you what I'm trying to say. I mean, in some sense, the hesitancy has got bought into. Look at this. A dip here, and then a bounce, and then it's kind of stayed resilient. And it's a small move. It's not really a dramatically high move, but a move nevertheless. So that's the key part about what's happened to the Nifty today. Strong day, you would probably say, considering the fact that the world is a iffy place today, and despite the fact that banks are not a happy place today. So the bank Nifty about 0.43% lower. The mid caps and the small caps will come up on your screen as well. They had a heady start. About 1% for the mid caps, so not bad going. The small cap index will come up on your screen, about 1% too. And therefore, the advanced decline ratio, the two worms will come up. And I would suspect that it will be showing a decent enough number in the session today. So the number is about 1302 currently to about 663. So that's about 2:1 in favor of the advances. And as you can see in this chart, it's just steady. In a good range for a better part of the trading day today. So good going there. Let's get the heat map. If the start of the day was punctuated by gains to a TCS and some others, now there are others coming in. So, by the way, an HSBC upgrade on TCS has gotten a 4% uptick on that stock. There is HCL Tech, Wipro participating. So Nifty IT is clearly making its weight felt. There is strength in HDFC Life, strength in BPCL. The oil marketing companies are seeing no gravity. There are skeptics out there, but the OMCs continue to fare very, very well. ONGC too, about a 3.5% uptick. So oil and gas certainly in the fray. Bharti Airtel, which started off the day as the top gainer, is now the number 8th gainer. Shows you the strength at the index and the other names beyond the newsmakers. What's done badly? Power Grid down about 2.5%. IndusInd a little bit. Britannia on the results stay down about 1.5%. So FMCG is taking a bit of a stick, but I don't think you're complaining, because Tamanna, on the index at least, the gains are very, very broad-based, spread across a number of sectors, with IT, of course, dominating today.
Astonishing, Niraj, what IT is doing. Astonishing. TCS and HCL Tech, all about 4% plus up. So yes, IT is the big story of the day, but a clutch of other stocks that are definitely making news and seeing a big move either way. Triveni Engineering, one of them, and that's the first one we'll pull up. So maybe come off its highs right now, but because of a strong Q3, and we'll pull up the chart, the intraday chart, a little later. But Triveni Engineering had seen very, very big gains in the double digits through the day because of strong Q3 numbers. Have come off their highs, but still about 1% up. Petronet LNG, the other big mover of the day. So the reports are that Qatar Energy has agreed to ink a long-term deal with Petronet LNG. More details on what exactly that deal is ahead on the show, but the stock up 6.5%. A lot of result-based reaction coming in, and Ajmera is definitely in that list of companies. A solid Q3. Look at the stock movement on that, 16.5%, 17% up. The pipeline looks good. The consolidated profit is up 186%. And hopefully we'll have a conversation with the management tomorrow to understand what's worked for Ajmera. Yes Bank is the other one, and now we covered this in the morning. And there was notification from the HDFC Bank Group, not to be confused with HDFC. So that includes their AMC, etc., saying that they have approvals to increase their stake in Yes Bank and IndusInd to about 9.5%. That could be one of the reasons that Yes Bank is up 11%. No logical reason why it should be, but anyway, you are seeing a strong move there. Clutch of companies that turned out not so great numbers as well. I would count Suven Pharma in that list. Definitely the specialty chemical space is anyway feeling the heat, and so is Suven. Prince Pipes is the other one that's had a disappointing quarter, and that stock 7% down. So overall, I would reckon that you'd see a lot of action, Niraj, depending on how the company is actually turned out. Results is the dominating play over here.
Results are the dominating play, and we've seen that across the board, right? With the responsive, Paradeep Phosphates and some others. By the way, some announcements on your screen before we get to our guests. So Inox Wind has signed an agreement for the launch of the 4 megawatt turbines in India. Now this opens up a new chapter simply because the stock may not be doing well. That's okay. But for Inox and Suzlon, they hitherto had moved to the 3.3 megawatt turbine, and that was the one that was going to be a big important one for both the companies in terms of margins. Now they have moved to the 4 megawatt turbine. At least Inox has announced that. Watch out. This could be an interesting time for some of these wind companies for sure. Dharmesh Kant, Head of Equity Research at Chola Securities, joins us right now to show with a thought on the fundamentals. In a bit, we'll also get in a technical view going. Dharmesh, good having you. Thanks for joining in. Seems to be a market that is refusing to go down. We get new players every single day or every single time to kind of give support. Today, it is IT. What's happening here?
Yeah, good afternoon, Niraj. I think if you look at the market closely, you will remember the era of 2004 to 7. So those 3 years, it was a similar sort of a market. Every day the market was almost making a new highs. But the best part around that time was the earnings was also catching up very fast. I mean, 25% kind of a CAGR was seen in the earnings on the broader market, and that was supporting the prices. So right now what is happening in the market is the similar kind of an activity. Earnings have been very good. I mean, even this quarter, outside Nifty 50, 250 companies aggregates which I have been tracking, it's a 40% kind of a profitability growth, which includes the accidents which has happened out there, for example, in the case of SBI. So those are the numbers which drag it down. Nonetheless, the numbers trajectory is fine, and market is anticipating this growth trajectory in earnings to continue at around, say, 20-23% kind of a CAGR for next 1 year. So that is the reason why markets are buoyant and sectoral play are happening based on the earnings which are being announced. IT has two segments. One is the mid cap and small cap segment, and the other is the large cap one. So earnings from the mid cap space was very good. If you look at KPIT, Mastech, Technologies, Newgen Software, Birlasoft, they all came out with a very good set of numbers, and the stock prices have moved, but the anticipation is this 30% kind of a PAT growth CAGR is likely to continue. So they are finding traction, and large caps, there was no negative news, and the body language of the management committee suggested that the worst is over and going forward things will be better off for the IT companies. Whether it will be, it has to be seen, but the market is giving benefit of doubt to them. And that's the reason why some buying is happening. So Niraj, two things are happening. One is earnings is actually playing out really well for most of the companies. Majority of the companies are coming out with very good set of numbers. And the second and more important thing is liquidity. So there are no sellers in the market. Even profit takers are not there, except some nimble traders. Otherwise, investors are staying put, and additional money is just driving the market crazy up there.
Absolutely. This HSBC note on IT being the big driver for these astonishing moves. They've upgraded TCS to a buy from a hold. They have downgraded Infi to hold from a buy. So let's pull up Infi as well. They say that the third quarter of 24 had unexpected positive surprises. And you saw that play out to some extent when the numbers are out. But this is specifically from top tier companies as well as mid tier is now showing cracks. They say cloud results were positive, read across four sector. They're not optimistic on a major surge in spend by banks, but growth forecast for FY25 remains in the range of 6 to 7%. Resilient near-term margin beat looks unsustainable, while valuation gap to TCS is down to only, say, 10%. Near-term growth and margin outlook for TCS seems better. So those are some of the reasons that you're seeing the IT space shining today. Kunal Shah is also with us, Senior Technical and Derivative Analyst at LKP Securities. A very good afternoon, Kunal. Hope you're doing well today. A quick take on the Nifty IT and the Bank Nifty.
Good afternoon. I think market seems to be very resilient on the lower end for Nifty specifically. If we talk about in today's trading session, IT has been in the flavor 21,650, 700, which was the support zone, which was even the 20-day moving average for the Nifty index. We didn't break that. and we are continuing this up move on the higher end. So I think a good up move is likely to come in the near term. I'm expecting Nifty to go towards first target of 22,200, and once that is taken out decisively, we expect even 22,600, 800 to come in the very short term. Talking about the Lagarde Bank Nifty, I think this is where some concerns are there. Bank Nifty is still trading below its 20-day moving average. So I think Bank Nifty still has a lot of room to go on the upside. First, 46,500 is what the immediate resistance is. Once we surpass that levels on a closing basis, then we will see a good rally in the Bank Nifty index as well. So I think Nifty is something which one should be aggressive long on. Bank Nifty is something which one should wait and watch. If we get a confirmation above 46,000, then probably a trade can be set up on Bank Nifty.
So wait and watch on Bank Nifty, go aggressive on the Nifty, says Kunal. Kunal, your take on the IT runners, the IT stars of the day, and all of them on the front line, TCS, HCL Tech, anything that you like over here and are showing possibilities of a fresh buy-in at these levels?
In an index which had already given a breakout 2 days back, and now the follow-up move has started over here. So I think one stock which I would like to highlight over here on the IT space is Info Edge. So I think Info Edge has given a very strong breakout on the technical chart, that is Naukri, and we might see this up move continuing in the near term. So 5,393 is where currently it is trading. One can keep a stop loss on the downside at 5,260, and one can look for targets on the higher end for 5,600 to 5,750. So I think a very strong breakout has been coming after a long consolidation phase. This will be a sharp short covering rally what we'll be getting in Naukri, and I think the targets what I mentioned will be achieved in the next 2 to 3 days.
Let me go quickly across now to Varsha, who's joining us with a list of stocks that are buzzing in trade today. Yes, Varsha.
Hi, Tamanna. So, few stocks that are buzzing is Triveni Turbine, where its share saw intraday high of almost 19% after company posted a double-digit growth in revenue and net profit for the December quarter. Then we have Jindal Worldwide, which saw intraday high of almost 17%. Volumes are trading at 19 times its 30-day average volume. Then Blue Dart Express, if you see, stock is trading at 13 times of its 30-day average volume. In last 1 month, stock has given almost negative 16% return to its shareholder. Now, recently they've come with the numbers. So Q3 revenue was in line, a slight miss on margins, but companies facing temporary challenges such as cost linked to the integration of new aircraft and slow industry activity. Then lastly, we have Paytm. If you see, after 3 consecutive days of lower circuits, some respite for Paytm shareholders, and stock rises almost 5% today.
Well, thanks a lot for that. Some interesting moves, and Paytm is the interesting one, isn't it? I mean, just look at what the stock has done today, up 4.5% at 459, and a clutch of stories that we've broken on the show, on the shows today, including something that both Murli and Tamanna spoke about in detail since 1 p.m.
Yeah, astonishing what Paytm's been doing. I just want to pull up that 1 week chart to just see the seesaw on the stock today. So a lot of things have happened since this morning. A clutch of startup founders have written to a whole host, to the Prime Minister, Finance Minister, to the RBI, saying go easy on Paytm. Don't be so harsh. Review what you've done. It's going to freeze the entire ecosystem of fintech. A little bit of a stretch, frankly, because, Vijay Shekhar Sharma has done a lot of things, but he's not necessarily the entire fintech sector. And if there is wrongdoing, it must be tackled. On the other end, Muralidhar Swaminathan broke a very, very important story confirming that Vijay Shekhar Sharma did visit the RBI yesterday. He asked for an appointment. It was granted. They listened to him, but have not decided to do anything at all. He's just been heard out. On the other hand, Paytm has approached at least 3 banks to onboard their customers, and they haven't agreed. They're a little hesitant because they want to do their due diligence first and also figure out what's happening with the entire RBI case. That story put out on NDTV Profit was actually confirmed in a sense when my colleague Pragati caught up with Parag Rao on how HDFC Bank is responding to the Paytm situation.
As of now, nothing happens to that. That continues. But we are watching the situation as it evolves.
Fair enough. Sir, has also there been any communication from the RBI about Paytm's nodal account with your bank?
really would not like to comment on at this point and say it would be inappropriate.
If in general, if you have to look at the whole payments business and the cards business also, with the recent thing that has happened with Paytm, and do you see this as an opportunity for other banks and fintechs to grow, or would there be a surge in demand in certain products where banks and fintechs would start capitalizing on that move?
Generally speaking, in any industry, if you see that maybe one or two players either change their strategy or sort of reduce their business, I mean, customers are smart today. They move to other service providers. I see some of that happening already. Some of the newspaper reports also say that. Okay, but that's only natural.
Okay, well, a bit of a breather for Paytm today, Dharmesh. You make money when you buy fear and you sell greed. So some people have bought that fear. Are you in the camp which is buying that fear around Paytm or leaving it alone?
See, it depends what kind of fear you are buying. So in the case of Paytm, I mean, the fears are well founded. I mean, any sort of non-compliance is a non-compliance, and the allegations here are very, very serious in nature. And the root cause, I mean, Tamanna said a few minutes back, that a lot of PE investors' money are stuck, and it's like a crybaby kind of a thing which is happening around. So it's up to the market to decide what they want to do. I mean, the type of non-compliance which has happened is actually very serious in nature. Though monetary loss may not be there, but this could lead to, this. I mean, an example has to be set through this. What technology can do and how the technology can be used in a better way for servicing the fintechs and the financial industry. So we are not buying it, and leave aside this, after, even if they come through, the entire turnaround of Paytm was based on this business. And this has now taken a backseat. Otherwise, they were already into operating losses, and this contribution profit concept I have never understood. To me, operating profit and profit is what matters. They have been lagging out there. So too many interests and invested money has been stuck now. And I do hope that RBI will do their job, very diligently, and justice will be served.
Kunal, would you see any reason to buy Paytm with its upswing today?
I think there's no point of bottom fishing right now. I think this is just a first buy, what we are getting from the lower levels. So if I look on the chart perspective, it needs to still give me a confirmation bottom that has been formed. I think it's a wait and watch situation right now. Don't need to jump in. Let the charts get cleared probably in the next 10 to 15 days. And probably then we'll have a good, if there's a bottom that is formed, then we could probably take a fresh entry.
Okay. Now, before we hit that break, Birla Corp was a set of numbers that came out while we were hearing that HDFC Bank, a spokesperson, and numbers seem very strong on the bottom line and the margin, as a result of which I think the stock has inched up a little bit. Net profit at 109 crores versus a loss of 1,450 crores, as a result of which just bring up the intraday of Birla Corp. And I think there is a bit of an uptick there. We've seen this happening across the cement space, wherein the numbers have looked very good largely. Remember ACC, remember Shree Cement, and a clutch of others. We'll talk about the cement on the other space on the other side of this break. Come back and stay tuned to India Market Close on NDTV Profit.
right, markets looking strong, and no surprises that the IT pack is leading the charge completely. In fact, most sectors doing decently except for banks. The Nifty bank is where the pain points remain. Oil and gas stocks also showing quite a bit of strength this afternoon. Petronet, LNG, of course, on top of that list, and we'll come to why in just a bit. But BPCL, HPCL, IOC, all of them showing no signs of letting up. Quick take from Kunal on some of the oil and gas pack, and anything if you like here, Kunal?
Yeah, I think already the sector has rallied a lot. I think if you look at the breakout on the technical charts, it was 1.5 months before. And from those levels, whether you name it an IOC, BPCL or an HPCL, they all have done very well. But one counter which I would like to highlight over here, it still has some upside left over here, and that counter would be GAIL, Gas Authority of India. I think there is still upside left in this stock of 182, 183 is where the stock is currently trading. The support for the stock on technicals is at 173. One can look for upside levels of 195 to 200 on the upside. So GAIL is ready to hit that 200 mark on the upside.
Okay, well, OMCs, oil and gas, the whole upstream oil, GAIL, everything seems to be participating in a big way. What else is participating is IT. Now, HSBC has come out with a note wherein they have upgraded TCS and maybe given some color on some others as well. Tushar joins in with the key snippets. And Tushar, could this be the reason why there is a bit of a spurt in IT today?
Good afternoon, Niraj. Good afternoon, Tamanna. Yes, the HSBC note is precisely the reason you can say that the top-tier IT companies are rallying today, pushing Nifty IT to a surge about 3% up today. So what HSBC has done, it has upgraded TCS to a buy rating and downgraded Infosys to a hold rating, citing the fact that TCS, in terms of near-term growth and margin, looks better. But the margin outlook and the large deal ramp-ups are still a concern for Infosys. But the biggest takeaway from the HSBC note is the fact that it's focusing on the top-tier IT companies after the Q3 results. Remember, they have largely outperformed in that respect because the earnings expectations itself was quite low. So in that sense, all the top 4 companies, TCS, Infosys, HCL Technologies, as well as even Wipro has actually lived up to estimates in Q3. What has been a pain point, as what HSBC is saying, is the next bunch. That is your Tech Mahindra, LTI Mindtree, Coforge, and Mphasis. That's where the pain point is. So HSBC is right now focusing for the year ahead. It's focusing on the top 4, and then specialized ER&D companies in India, such as KPIT Technologies and Tata Technologies, going ahead for the full year. They have not revised the entire year's growth outlook for the industry, and it still stands at about 6 to 7%, because the demand scenario is still a bit iffy. So there is no visibility in a sense to say whether the deal making is still happening, discretionary deal making is still happening or not. Niraj.
Absolutely. And Petronet LNG, the other stock in focus, the company is now set to sign a new long-term deal with Qatar Energy, and you're already seeing that spike about 6% up. Mihika, what are the details of this deal?
Yeah, so they're going to extend the long-term deal that they have in terms of LNG imports with Qatar, and this deal will go beyond 2028. Now, the existing deal expires in 2028, where Petronet LNG is currently importing 7.5 million metric tons of LNG per annum, and these imports are at a 12.67% discount to the current Brent crude future prices, and they also have a fixed charge of 52 per million metric BTU. Now, in the renewed deal, one of the major changes is that it will have no fixed charge, and it's expected to be signed on a delivery per basis. So what this basically does is reduces the procurement cost of the company to the extent of the fixed costs that are currently in play, and it will benefit the company from 2028 onwards from a cost perspective. From the country-wise perspective, Qatar is one of the world's top LNG exporters, and its aims to increase its liquefaction capacity to 126 million tons per year by 2027 from the current 77 million tons per year. And it has already signed many long-term deals with other European majors. And in terms of India, it does aim to increase its natural gas share in the energy mix from 6.2% currently to 15% by 2030.
So Petronet LNG in focus. Kunal, you talked about GAIL, but what about Petronet LNG?
So I think even that is looking very good on the chart perspective. The main earlier resistance for the stock, which was around 246, 247 zone, that was taken out decisively, and post that we have seen a very good rally. So I think the stock on the higher end is likely to go towards that mark of 303, 310 levels on the upside. So clearly even a buy from the current levels.
Dharmesh, take on Petronet LNG and the oil and gas space today?
See, the oil and gas space has been riding quite well, and just because there was a valuation comfort. So most of these companies were available at sub 10 PE multiples. Even ONGC today is below over 10 PE multiple going forward 1 year. So, and the return ratios are quite strong, and they had a stable set of earnings flowing into it, except refiners, which used to come under radar sometimes. So that way, this space is looking attractive even now. And Petronet Energy, see, the company has been clogging a CAGR of around 10-12% on the profitability front and has an ROE of 22-23%, and still available at 10 times 1 year forward PE multiple. So valuation gap is driving the buzz out here. I think if you have already invested in the stock, stay invested, stay put. No need to cash on the profits. And sensing the kind of a market where value-wise are very few, liquidity will keep on chasing such companies. And I think 350, 360 should be a fair value of the company based on 1 year price targets, earnings multiple, basically.
Okay. You know, the oil PSUs have done okay. You can't say the same thing for all. I mean, just say the market is now starting to kind of not take everything higher. So today, for example, NBCC is down 5.5%. Midhani is down about 4.5%. Bank of India, because of that Morgan Stanley downgrade maybe, but 2 days on a trot has corrected a little bit. So I think there are a few which are now starting to feel that little bit of a pinch, and that's to be monitored as well. The other set of stocks which we'll talk about after this break with our guests is the QSRs. Today, Devyani is down about 2.5%, but the numbers that have come in from a Devyani or a Westlife or what have you, Jubilant have been pretty ordinary, if you will. I think that merits a question about the kind of valuations that some of these stocks trade at. Maybe we'll talk about that as well. Take a quick break. Talk about all of these things I mentioned. We'll also try and get you the top buy today, sell tomorrow, or sell today, buy tomorrow ideas. Back with India market close right here on NDTV Profit. The stock of Bharti Airtel has come off a little bit from the highs of the day. The commentary from the con call is interesting. Most importantly, talking about how capex, while it may stay elevated this fiscal, a large part of that is done by FY24, particularly rural, and therefore maybe the implication is that FY25 may not have very, very high capex numbers, and understandable because 5G spends have been done in a meaningful way. There is some commentary, I believe, on ARPUs as that which will come in, but it'll be interesting to see if indeed there is more comments on ARPU. Tamanna, are you spotting anything?
Yeah. So real ARPU movement only after tariff hikes is what the key word is coming out from Gopal Vittal, and that's important. They're also talking about 2G contribution to their business, which is nearly 17%. Some circles where there is still some high 2G usage is Bihar, Jharkhand, but they are yet to see if 2G can be fully shut in the next few years. And I think that's important because even if you're setting up infrastructure for 5G, 2G still lingers on, and India is one of the few markets of this size which still has 2G, considering how fast-paced our digital,
the population.
digital adoption is. I don't know. I think we should say bye to 2G sooner than later, but let's see.
Yeah, they will migrate people onto 4G. It will be great for their ARPUs as well. But it's an interesting comment that it won't happen until there is some tariff hikes. And Bharti's been, well, for lack of a better word, gone hoarse talking about the need for raising tariffs. Let's see as and when that happens. Just one quick word before we get to Agam. And there's an interesting thing about that Cities posted in their note on Airtel and done this comparison over the last 10 quarters and how, despite all the conversation that we hear about getting more clients, Airtel has just had a serious uptick in various metrics around versus Jio, including profitability, so on and so forth. So, Citi no doubt reiterated that buy with the target of 1270. Okay. I don't know if Airtel features in the list of stocks that Agam is marking in. But we'll start off, of course, with the larger picture. Agam, what is the data suggesting? And what about, is there some very interesting thing happening in specific stocks?
Right. Well, it's certainly about stocks as compared to indices. This afternoon, it's been turning out to be a very quiet expiry as far as the Fin Nifty goes. I'll talk about that in just a bit, but as far as the Nifty is concerned, well, 0.7% up move there. So, well, a lot of strength coming in perhaps in the latter half of the session with a good 4% added in open interest towards longs. The Bank Nifty is, on the other hand, lagging to a certain extent, in fact, down by around 0.4%. And that's where we've seen a near 11% added towards shorts. Fin Nifty is something that we are keeping an eye on, and of course a lot of constituents of the Fin Nifty and the Bank Nifty are same. But let's talk about the Nifty and the options market. Remember, there is a lot of unwinding coming through, but in terms of your overall open interest picture, let's pull that out as well and take a look at how things are shaping there. So we do have a lot more resistance even at the moment at around the 22,000 mark, and the 22,000 call is the one with the maximum open interest. So that will be a little bit of a barrier as far as Nifty is concerned, at least in the near term over the course of the next couple of days. Let's move on and talk about the Fin Nifty. And, we were talking about 20,400, 20,500, and it does seem like it's been gyrating between these levels. Of course, for now, it does seem like we are likely to see the expiry at around 20,350 as far as Fin Nifty goes. Let's talk about stocks then. Stocks is where we are seeing a little more traction coming through. Now, Ashok Leyland, where we don't have too much increase in underlying, but longs building up there. Chambal Fertilizers reacting to earnings. Alchem Labs, SAIL, and Oracle Financial Services, all of them advancing and looking at longs and, well, short covering. So advances as far as your open interest losers are concerned as well. Underlying advancing and declining as far as your open interest goes. Pidilite, Nalco, UPL, Bharat Forge, and Zydus Life, all of them looking at about a short covering. Save for what we are seeing in stocks. As far as indices are concerned, at least in terms of the Fin Nifty, that's been largely flattish.
Yeah, absolutely. Largely flattish, and I like that term, gyrating. That's what's happening in a large part of the markets as well, though this time that gyration is upwards as far as the front lines are concerned, about 152 points up on the Nifty 50. A clutch of results out today, and two that we're going to talk about. One, I would say, positive and one negative. Godrej Properties is lower today after its Q3 missed streets estimates. On the other hand, Ajmera Realty has zoomed on better than expected results. Saloni is joining us now to break down the story of both these real estate companies and their numbers. Saloni?
Hi, Tamanna. Yes, so when you talk about Godrej Properties, on one hand, of course, they've missed estimates, in front of net profit revenue. But I want to highlight what the company is saying, because for real estate companies, actually, how much sales value they have, how much collections they have is something that should be tracked. So the company is saying that they have actually achieved, highest ever quarterly sales for the second quarter in a row. And their booking value has also gained, about 76%. And they have launched about 8 new projects during this quarter across 5 cities. They are just not Mumbai-based realty firm anymore. They are also present, pretty strongly at Delhi as well as Bangalore. And they have been getting a lot of sales value from the projects that they have launched there as well. The company is also confident to exceed their bookings guidance of rupees 14,000 crore for FY24, and till December quarter, they have achieved about 93% of that. So for sure, possibly that they'll be exceeding this. And also, they're also confident of delivering the best ever year in terms of cash collections and deliveries. Now, talking about Ajmera Realty, as you can see the stock reaction, it was expected to have a good earnings, especially based on the operational highlights that it shared, during the start of the month. So talking about their profit and revenue a bit, obviously more than 100% surge there. Sales value surged by about 98% during the quarter, and they have said that this is the highest quarterly revenue in a decade for them of about rupees 200 crore. They have also have the launch pipeline, which is expected to have a gross development value of rupees 3,130 crore across 8 projects that they are planning to do, and they are going to launch it in the next 12 months. So lots to watch in this realty space as well.
All right, Saloni, a lot to watch in this reality space, and we've been seeing that trend overall. If you look at Ajmera now on a 20% upswing, while Godrej Properties is down 1%, and let's pull up all the key components here. Whether it's a macro tech, whether it's a Brigade, Prestige, Realty's had quite a run in. I would say, Dharmesh, Kant, in a sense, now you're separating the wheat from the chaff when the numbers are coming in to see whether this real estate story is largely persisting or not. What is the overview you're getting, seeing the clutch of Q3 numbers that are out yet?
It's fairly bullish. I think this growth continuity is likely to stay. And this business is a bit lumpy business. So, for Ajmera Realty, this quarter was not good. But for others, it was great. So that depends upon when you are doing the sales booking and when your projects are getting launched, and when you are actually recognizing the revenue in your P&L. So, but overall, what I have seen and whatever, checks we have done, either through the developers, builders, or through the agents who are into the selling of the properties, the queries have been very strong and robust, and deals are materializing very fast. The translation of first conversation to the actual booking is, the time factor is very, very short nowadays. And this is happening at the top of the interest rate cycle. So, real estate players can enjoy the double benefit. One is when the interest rate cycle comes down, they would be more aggressive buyers coming into play. And the way commodity cycle is playing out across the globe, I don't think that can play out as a headwind in the near future. So benefits of the tailwinds of the lower input prices is already there. And demand has been robust, and most of the place after this is also sitting on a large, pipeline of inventories to come forward in next 2 or 3 years. So normally, if you look at the book-to-bill ratio, around 2 times of what they are doing an annualized sales, that's the project in the pipeline as of now. So I think this momentum will continue. Having said that, you have to be mindful of the fact that most of the stock prices have rallied quite hard. So just be a bit patient when you are investing at current levels for the returns to materialize. Around 25 to 30% kind of an upside I see if you are holding it for at least a year's period. And the topic again being there is Oberoi Realty, Phoenix Mill, DLF.
Oberoi Realty and DLF. Are those the two of your top picks, Dharmesh?
Yeah, Tamanna. Those are the two.
Okay. Let me get Kunal's view. Ajmera, Godrej Properties, and top picks in this space.
Yeah, I think overall looking at the realty space, you have seen a massive rally in the entire sector But going forward, if I look at some of the counters which will do very well, I don't think the entire pack will do very well going forward. I think DLF continues to be a top pick from the technical side from my end as well. I think the structure still remains on the bullish end. We are seeing on the lower time frame as well, higher high, higher low formations intact. Above 800, there will be a new up move which will be starting, which will be taking the stock towards 850, 860 zone. I think DLF is something which one should look at the current levels. Even from the current levels, a 10% upside is possible.
Okay, just before I go to the other aspect, just one quick word. Today we are seeing some of the pipe companies and steel pipes or PVC pipes going through a bit of a downer. So Prince Pipe is amongst the top losers, down 7%. But look at the last 1 month performance. For example, APL Apollo Tubes, not strictly a pipes company, steel tubes company and construction material. But look at APL Apollo today and look at APL Apollo over the last few days. I think the last 1 month or a 3 month performance of APL Apollo from a high of 1700 all the way down to 1402. So that's taken a bit of a stick too. So selectively, some of these businesses are coming off, We'll talk about APL Apollo with Dharmesh. He would have looked at it because that whole group is going through a bit of a pullback after having that very high performance. Actually, Dharmesh, can I quickly ask you, APL Apollo, Apollo Pipes, SG Finserv, it's a newly listed NBFC arm that they have. All of them are kind of coming off and maybe with reason.
Yeah, I think this reversion to mean is happening there as far as valuations are concerned. Initially, when the run-up was there, the expectation was too high as to the profitability, which is not the case. And the initial run-up, if you look at it, it was more to do with the commodity cycle, coming down. And that time, it was a sharp rally which happened in all these stocks. So the run-up itself in the first case was beyond what it should have been. So I think it's more of a reversion to mean. As far as businesses are concerned, I don't see any challenge coming out there. So it's a business as usual is likely to be there for all these companies, be it APL, Apollo Tubes, which is more of a prefab kind of a company used in construction. But still, the queries and order book is strong there.
All right, another big number to focus on is Britannia, who's going to post its Q3 earnings later today. And according to estimates, the company will see another soft quarter. Sesha is joining us with more details.
Right, so Britannia is likely to report another quarter of soft top-line growth. Now, this is on the back of the pricing getting anniversarized as the company laps a high base. Now, on a year-on-year basis, Britannia is expected to report a revenue growth of 2.4% and a net profit decline of net profit will decline 40.7%. It is important to note here that the steep decline in net profit is due to a one-time gain in the base quarter. In Q3, the company had gained 358 crore due to its joint venture agreement with France's Belsa Group for the cheese business. Now, as far as the operating performance is concerned, EBITDA is expected to be flat, while margin is seen to contract at 8.9% from 19.5%. Now, higher advertising spends is likely to dent the operating margins. Since there is no major commodity cost inflation, the gross margins are expected to improve. Now, the company has also taken price cuts, which is likely to aid some recovery in the rural growth. However, the competition from regional players remains high, so that is going to keep the volumes under check. Volumes are estimated to grow at about 1 to 3%, that is low single digits in the third quarter. Now, the key management commentary to watch out for would be the demand outlook, update on the core business, the core biscuits portfolio, and the progress on the new adjacencies like the cheese business, pricing, any further pricing action, raw material price trajectory, as well as the market share trends.
Got it. Okay. Well, thanks, Sesa, for that. And, this has been a bit of a pickle, except for maybe a Colgate or a GCPL, which kind of delivered. Maybe Dabur did a little bit as well. FMCG, is there pain or could that be turning around? Now, Kunal, it's very difficult to call this out fundamentally because the commentary from some of the majors also has been iffy, though I think there are notes which are saying that rural recovery is seen around the corner. But in terms of the names, today FMCGs are taking a bit of a stick. How do the charts or what do the derivative positions tell you?
So I think definitely, even if I look on the chart, Niraj, I think the entire sector, the Nifty FMCG chart is trading in a clear-cut downtrend. So there are lower high, lower low formations which are intact. In fact, the entire sector is on the verge of a breakdown as well. So 54,000 is something which is a make or break level for the index. Currently, it is trading at 54,400. So I think below 54,000, the real pain will start coming in for the entire FMCG pack. And that is where we see the Nifty FMCG even going to the levels of 52,200 on the downside. So I think FMCG is something which one should clearly avoid. A lot of money is shifting from this FMCG space and going into the other packs. So I think that is where the real momentum will pick up.
One exception perhaps would be a Varun Beverages. Clutch of reports this morning quite bullish on their numbers. Numbers also look largely decent. Focus on high revenue, high margin segments has been loaded, and that's talk about 3% up. I'm coming back to you, Kunal, on a take on Varun Beverages.
I think Varun Beverages is one stock which has been an outperformer from the entire FMCG space. And I think the kind of chart structure what it has already seen a very sharp rally from the lower levels. So from the current levels, I think a fresh entry doesn't make any sense. But if you are holding it from the lower levels, continue holding it with a trailing stop loss of 1,300 on the downside.
Okay, well, 3.5% up for Varun Beverages, and you know, obviously it's not any kind of valuation re-rating. It's just the fact that the company's delivered and earnings estimates for maybe calendar year 25 have been taken higher, which is why this is up 3.5% in the session today. Really, really strong show put up by Varun Beverages. Fundamentally, Dharmesh, would you buy a Varun or are there better options there?
Look, really, what is perplexing about the entire FMCG space is they are taking price cuts, and at the same time they are citing regional competition. Given the fact that economies of scale and everything is in their favor, it makes, I mean, this is very disturbing commentary coming from the management of FMCG space. So that has to be looked into with more detail, why they are losing business to regional players, whereas with the kind of bandwidth they are having, they should be winning it over. So that's a challenge out there. As far as Varun Beverages is concerned, it's a totally a different play. It's not a FMCG play. I mean, both organic and inorganic growth, this company has been doing very well. The capital deployment has been excellent. The type of capital efficiency they have been using is very aggressive. And I think valuations will always, will be beyond the reach for this company. But if you are invested, stay invested. If you're not invested, still it's a good value buy for next 3 to 5 years.
Okay, well, 3:20, so time to get in closing strategies from our guests. Kunal, a BTST or an STBT idea or two, as the case may be?
Yes, I think definitely a BTST idea here. Firstly, I would like to highlight about one sector, that is metals. I think Nifty Metal is something which is looking very strong on the technical charts, and still there is very much upside room which is possible in the entire sector as well. So I think as a BTST candidate, my top pick over there would be Tata Steel. 144, 145 is somewhere what it is trading right now. One can keep a stop loss of 140 on the downside and look for targets of 150 to 153 on the higher end. So Tata Steel is my first top pick from the FMCG, from the metal space. The next thing which I'm liking over here on the technical charts is Patanjali. If you look at the chart, the stock had been in a sideways consolidation. Specifically in today's trading session, we have seen a base formation plus a bullish engulfing candle, which is a bullish reversal candle on the technical chart. So I think a very good up move could be seen in the tomorrow's trading session on Patanjali. So 1600 is somewhere where it is currently trading. One can initiate long positions, keep a stop loss of 1540 and look for targets of 1700 to 1750 on the upside.
Wow, that's... Well, we're talking about FMCG names, and Kunal is right. This one is kind of broken out of the charts, if you will. Quite a strong move today. And, you know, I remember there was a supply zone of some investor stake at about 1100 or thereabouts, about maybe 6 months ago, if I'm not wrong. So if you pull up the Patanjali chart for the last 1 year, And you see that flatlining around some around May, June, July. It kept on hitting that resistance simply because there was a lot of supply. Once the supply has gotten absorbed, I think there is a really smart move that has come in to Patanjali Foods and has gained quite a bit in the last 3 to 4 months. So definitely watch out for this one in trade. Dharmesh, any ideas, anything that you've looked at in the recent past that looks attractive fundamentally?
Yeah, I think the auto space looks quite attractive. I mean, the large caps are already known. So there I will just name you a few like Maruti, Hero MotoCorp, TVS Motor, Bajaj Autos are the topic. However, from that space, I mean, JBM Auto came out with very strong set of numbers, and it's a diversified play between electric buses and the electric vehicle auto component making for the electric vehicle. So, but that stands quite well poised to reap on the benefits of both the sides, be it auto components for the EVs and the EV buses. So that we have been recommending to our clients for a disclosure perspective. And the company is still undervalued to buy and a lot more to go for that company. So that looks very interesting.
The other thing that's looking interesting today are metal stocks. SAIL, nearly 8% up. Nalco, Hind Copper, all of them are completely on a roll. And you're seeing, those pops of excitement as far as metal is concerned on and off, but perhaps not as consistently. I'm going to start with Kunal on, anything that you like in this space.
I think, as I mentioned, metal as the sector is looking extremely bullish for the next 1 to 2 months. I think we could see some huge upside coming in the entire space. For me, I'll have one topic over here, and that would be Graphite India. So this is a cash counter. If you look at the technical charts of Graphite, it has already given us a very good symmetrical triangle breakout in yesterday's trading session. Post that, there has been a follow-up move in the stock as well. So somewhere close to around 600, the stock is trading here. I'll have a positional view of this for the next 1.5 months or so. One can initiate long positions at current market price or at any dips towards 570, 560 as well. On the lower end, the support for the stock is placed at 530, and one can look for aggressive higher end targets of 710 to 750 on the upside. So I think Graphite is something which is looking very good on the chart, and we can see a very good momentum buy from the current levels.
Okay, well, so that's the view from our guest. Speaking of voices, of course, we spoke to Samit Vartak, founding partner and CEO of Sejuan Investments. He said that he expects a strong growth in India Inc. earnings for the next 3 to 5 years.
See, the corporate India is so deleveraged and they're making reasonable ROE, in that 16 to 18% range, that they can fund themselves. You don't really need huge banking, leverage to grow. So the banking credit growth may not be as high as what we saw maybe in that 2003 to 2008 kind of a period, right? But the growth can be pretty sharp. So it's easier to find companies which are growing at that, 25% kind of a range. And I feel it would be much easier to find such growth in the next 5 years compared to what we could in the last 10 years, because the growth rate at a market level will be much higher than what we saw in the last 10 years. So it's important. See, historically, if you see what happens when things reach at this level is that every 3.5 years, small cap index has fallen on an average by almost 40%. Right? Whether it will happen this time, I mean, if history, you just go by historical statistics, it should. But question is fundamentals. I think every cycle is different. Fundamentals when it fell from 2018 were completely different. The banking system was in a mess. Even at a small mid-cap level, there are a lot more corporate governance issues. Leverage had reached high levels. Even in 2008, if you see the leverage level, at corporate balance sheet, it was really high. Credit terms were very loose. Working capital cycle had stretched. And the operating cash flow was lower than the net profits. Today the operating cash flow is at least 115% of the net profit. The corporate balance sheet is the least leverage. ROE, even at a small cap level, has reached close to 16-17%. During that cycle, it was 12%, and the historical average is 12%. So across the board in terms of cash flow, return profile, things have improved. Right. And I am pretty sure there are a lot of pockets which may fall by 40, 50, 60%, just given the way things have run up. There are too many, I guess. I mean, the lower the float, the higher have been the returns. The higher the risk, the higher have been the returns. That's the kind of market we have been. So if you have 200 stocks in your portfolio, the chance of you doing.
Yeah, but I think the point that he made was if you have more stocks in your portfolio, just the way some of the stocks have moved up, the chances are you would have made better returns. But today you would certainly have made better returns if you had metals in your portfolio, if you had IT in your portfolio, because the market is ending at the day's high. This is very, very strong. In the morning on the trade setup, we had mentioned that even if there is a pullback, the cuts won't be vicious. And I think in some sense, from a day trader's perspective, though we don't make predictions, but I think this has turned out to be pretty prescient, if you will. Not the banks, they haven't done well, but non-banks, IT and metals, clearly looting the roost. But I must say, if you look at the heat map, will come up on your screen next, it's spread out across. So from a BPCL, which is oil and gas, to HDFC Life insurance, to HCL Tech, TCS, IT, Maruti Auto, ONGC, oil upstream, L&T, capital goods or construction or infra, however you bucket it. Look at the breadth of sectors which are participating in the rally today, which is actually a great thing, and dwarfing the weakness that has come in to banks in the session today. I think that's the key thing. Losers include a Power Grid, Britannia, to an extent ITC, so FMCG, SALT, and clearly look at that Axis Bank, Kotak Bank, etc., HDFC Bank flattish. So banks are sulking, but that is masked so well by what some of the other sectors have done. And the newsmaker actually is Bharti, which is up 2%. It was a top gainer when we started the day. It is now the 12th best performing stock, which means the number of stocks that have eclipsed Airtel and are now in the top draw are large and packing some punch really. And it's showing, by the way, not just on the Nifty, but on the market breadth as well. Before I hand it over to Tamanna for the broader end of the spectrum, just pull up the advanced decline ratio and you will see such a strong breadth in the market today. Very, very heartening from a bull's perspective. But great action. There is a market close, of course. But Tamanna, before we wrap up, great action in the broader end of the spectrum.
Yes, but today I would say that your mainline indices are also competing for that kind of a push up. Of course, your small cap and your mid cap indices is about 1.5% up. Yes Bank, one of the top gainers. SAIL, even your pharma pack doing fairly well. Gland Pharma, Ipca Lab, Zydus Lab, all of them. Zydus Life doing pretty well. Suven, of course, an outlier there on the back of numbers. On the other hand, banks have had a mixed curates kind of a day. So Bank of India and Indian Bank, Bandhan, still pretty weak over there. I just want to see what Paytm is closing off. We've tracked that story all day after 3 sessions of getting completely hammered. The stock is closing today still about 3.5% up. Let's also see what's happened to Jio Financial, which had run up yesterday on rumors that it would be acquiring Paytm's wallet. There were clarifications galore, and yes, that stock about 6.5-7% down today. So all in all, a good close for a day which seemed muted in a narrow range. Not a bad close at all, but some standouts along the way, which are clearly based on what their results look like. So that's all the time we have today on India Market Close. From Niraj, me and the entire team that put it together, thank you so much for watching. welcome. India's Monetary Policy Committee is set to announce its decision on Thursday. And it appears to be a bit of a no-brainer that the MPC will continue to maintain a status quo on the key lending rate. In fact, all 41 economists polled by Bloomberg expect the MPC to hold the repo rate steady at 6.5% on Thursday. That's not to say that Thursday will be bereft of any action. Will the MPC sound a tad less hawkish than we've seen all of the past year? What can we expect in terms of liquidity measures from the central bank? To answer some of these queries, I have with me Niraj, economist at ANZ Research, and Madan Sabnawis, chief economist at the Bank of Baroda. Thank you so very much to both of you for taking time out for us today. So, Madan sir, I'd like to begin with you. What are your expectations going into this policy?
As you have mentioned, we are not expecting any change in the repo rate or even the stance for that matter. In fact, what would be of interest is that if the RBI has something to say on the GDP growth forecast for 25, I think that would probably be the novel factor. There is, of course, certain kind of guidance which is given by the RBI on the course of inflation. But to my mind, between last time when the policy was announced and today, I don't think there have been any significant factors either on the food front or even on the core front to justify any kind of change in their forecast which they made of inflation right up to the third quarter of next year. So therefore, to my mind, there will be no change in the repo rate or in the inflation forecast. But in terms of GDP forecast, I think based on the fact that the NSO had brought out a forecast of 7.3% for last year, and the government has given its own projection of 10.5% in nominal terms in the budget. So there could be some kind of a forward-looking number provided by the RBI, especially on the fiscal 25 growth number. There could be some kind of an upward revision in terms of 23-24, where the RBI pegged growth at 7%. But again, here, I think the RBI will just assume that the growth for 23-24 is 7.3%. So no real surprises out there. And even in terms of the overall language, it would be more or less what we heard last time, because the RBI is all very cautious. It doesn't give anything much away. It's going to continue to say that it's going to regulate liquidity and make sure that there is no shortage of liquidity. And the tools which has already been mentioned has been the VRR and VRRR, which will continue to be used in the coming months too.
Sure. Okay. So, Niraj, taking the conversation forward from where Madan sir's left it at, the broad consensus appears to be that not just the repo rate, but the stance also will be continued to maintained as is. However, we have seen the liquidity deficit, worsen in the past month ever since the last policy. What can we expect in terms of liquidity measures?
Look, I think the RBI language on liquidity is not going to change very much. So let's take a step back and understand what they're trying to do. I would first want to clarify that the Reserve Bank of India has never preferred a very, very large liquidity deficit, even though they have been fighting high inflation, right? So because along with the inflation fight, they also have to ensure that they are meeting the productive needs of the economy. In the last month, what happened was a combination of some seasonal as well as one-off factors. The currency buildup tends to be stronger during January to April, May, and given this is going to be a national election year, this tendency could be even stronger. That's one. The second bit is that we witnessed some outflows on the FPI account, largely on account of equity outflows. And thirdly, there was an unexpected slowdown in the government spending. So all of these three factors in combination meant that the liquidity deficit, which the RBI was broadly maintaining in the range of 0 to 1 trillion, widened above that, and which was why, the overnight call rate shot up above the MSF rate, so on and so forth, which got a lot of people thinking, with the RBI infusing liquidity, does it mean a de facto change of stance? My view is that it is not. It was some temporary factors which the RBI alleviated, and some of them will die down on their own. So I think no change of stance. And in terms of liquidity, they will continue to maintain liquidity in appropriation with their stance, which remains a withdrawal of accommodation.
All right. So you've mentioned, you've laid out a whole host of factors that was responsible for the liquidity deficit that we saw. Can we expect this to ease going forward?
Well, I think that, as the Reserve Bank of India becomes somewhat more comfortable with the inflation outlook, there is a possibility that they may begin preferring a somewhat narrower liquidity deficit, but that remains to be seen. Of course, inflation outlook, as Madan mentioned, they would be also giving out the inflation outlook for Q1 of the next year, 2025, and where that number lands will also be critical in us understanding, what kind of inflation trajectory they're looking at.
Got it. Okay. Madan sir, I do want to ask you about high-frequency indicators. We've, of course, seen economic activity continue to remain resilient and the economy performing better than what was expected at the start of this year. What's your reading of the economy at this point? And we have seen a little bit of easing post the festive season. Would that be correct?
No, I think that is right, because there have been two factors which have come in the way of the kind of buoyancy we saw in the first 7-8 months. One is, of course, the pent-up demand phenomenon which we saw post-COVID, something which we first saw in the manufacturing sector. Later on, it came in the services sector. So I think that's one of the reasons why the PMIs have been very buoyant, and that's something which we're seeing also in terms of the overall GDP forecast for the year at 7.3%. We, of course, at Bank of Baroda are looking at a number still of 6.6, 6.7%. I think there's a downside to it. There are reasons for it. I won't get into it right now. Second factor, in terms of the buoyancy being moderated a bit, has been consistently high inflation. Because we should remember that inflation has been high ever since the pandemic came to an end. We first had global commodity prices going up, and then we saw some bit of domestic factors pushing up the prices of food items, something which continues even today. So I think the real purchasing power is something which has been affected, and that's one of the reasons why we have seen the rural demand has been the missing block in this entire story. And even today, when you're looking at the commentaries put forward by corporates for the third quarter results, especially in the consumer goods sector, it's almost the same kind of a narrative we are seeing, where the rural demand has not picked up. And even within the urban demand, we have seen that it's the premium products which are doing better than the regular products. So all this means that inflation has definitely come in the way of demand, and that's something which will probably continue till the end of this financial year. Hopefully next year, that's the next financial year, fiscal 25, when inflation starts moving downwards, going by the RBI projections, but that would probably be only in the second quarter, there could be a revival, a more broad-based revival, especially in the consumer space. Today, it's more in industries which are infrastructure related, which are doing very well.
Okay, I do want to ask you a little bit more about the rural demand condition. We've seen a whole host of high-frequency indicators giving a little bit of a mixed picture. In recent weeks, is there reason to believe that there has been a little bit of an uptick? Even going by market commentary that you mentioned of FMCG companies, for instance, things do appear to be looking up